The missing link between innovation and investment is not just opportunity, but the strategic insight to bridge the two, turning potential into measurable impact. Let's take a moment to reflect on that. Good morning, ladies and gentlemen, and welcome to another episode of Spark, Shift, Succeed, brought to you by Unique Speaker Bureau International. I am your host, Mal Tsotetse. Our theme today, the missing link between innovation and investment, is one we need to be familiar with. Innovation is everywhere, ideas are strong, energy is high, slide decks are polished. But impact, that's where things fall short. That's the gap that we are here to address because the truth is most organizations don't face a strategy problem. They face an execution gap. And our speaker here today works exactly in that space. Keshni Morar is a powerhouse in strategy and operations, specializing in bridging the gap between innovation and execution. With 20 years of experience, she partners with CEOs and executive teams to align vision, people, and capital, ensuring that big ideas lead to measurable results. Her career spans corporate strategy at Vodacom, venture building with Investable, angel investing with Josie Angels, and leading complex turnarounds such as chief of staff. Keshni helps businesses move beyond the planning stage to tangible growth and impact. She works with funders, corporates, investors, and entrepreneurs, designing and executing strategies that drive progress, innovation, and value. Whether shaping operating models or leading fundraising, Keshni's focus is always on results that matter. Please help me in welcoming Keshni Morar. Keshni, over to you.
Morning, everybody. It is so lovely to see everybody this morning. I'm not sure where you guys dialing in from, but thank you for having me and thank you for that wonderful introduction. If I'm going to ask you guys, please, in the chat, just tell us where you're coming from, put your LinkedIn in, it'd be great to connect with you afterwards. Because today's session, I'm going to try and get in just the theory behind what I actually do and how I go about doing it. And I'm going to start off by asking you one simple question. Well, two, actually. And I want to understand where you're coming from and how this actually impacts you. So for the first one, how many of you are actually involved in innovation initiatives in your businesses? I'm trying to find the chat. Just pop it into the chat and then we can start having a more interactive discussion around where you're going, what you're doing, and how we can help. I'm not saying anything yet, but I'm going to leave that there, and I'm going to let you pop that in. Sorry, with the multiple screens I've got. The first one would be, are you involved in any innovation initiatives in your business, whether it's labs, it's pilots, it's partnerships? Uganda, good morning. Yes, Sarah. Yes, I am. Yes. You'll find a lot of people coming from corporate would generally be involved in these types of partnerships. When they come from small businesses, you'll feel like you're in the lab, you are the pilot, you are looking for those partnerships. So yes, good morning and thank you. The next question then, let's move. How many of you have turned any of these ideas or innovations into meaningful, scalable businesses? And I don't mean just a brick and mortar company. I'm talking about, think next OpenAI, what we used to rave about Airbnb, right? That's the thing of the past. We look at now OpenAI's, Claude, all these types of technologies that are coming through. And I'm assuming many people on the call currently use those. Yeah. That's a lot of people. Now, if you have not heard about ChatGPT and all of those, I don't know where you are, but it's time to step up because your life's about to change. Now, for those that are actually working in this space, I'm sure that you get involved in many discussions around innovation. How do we get new products to customers? How do we create new revenues? What do we do for our big businesses to keep growing and surviving? right? Some people are just in surviving stage, some are in growth stage. But I can tell you one thing, that when it comes to what we do in Africa, there's absolutely no threshold. There is no limit to how many good ideas there are out there and how much opportunity is out there. The one problem that we do have is turning these ideas and opportunities into viable investments that investors are looking for. And so that brings me to where I feel corporate has a massive, massive role to play. And so when I think of corporate innovation nowadays, and I've been in this space, working for telcos across the continent, I think of them as these big cargo ships that are trying to parallel park. They've got all the resources, they've got the power, they've got the people. But generally, they seem to just miss it because you get now with what's happening with technology and the likes, these little speedboats that are run by two little founders who are sleep deprived and have a number of questionable life choices. They just slide right in and they take the space and they start eating away at these corporates' market share. And then if I was on the corporate side again, I would be sitting there thinking, how is that possible? How is it that we missed that moment and we got such a small business coming in and taking our pie? And that's the gap that we need to chat about today. It's everything that we are still missing that as corporates, we need to be focusing on. So if you've got questions around that, pop them into the chat and we can address them in a bit. Because in my view, when we look at corporates and startups generally don't talk the same language, right? Corporates and innovation generally don't speak the same language. When you talk to your innovation teams within corporates, some of them quite can't connect with the rest of the organization and bring them together. So what's happening here? We see a very big mismatch in terms of the language being spoken between innovation and investment. And investment falls very largely under the CFO, the bean counters. Whereas innovation is the right brain people who want to make things possible. It's the curious minds, it's the optimistic minds, it's those asking what is possible, right? Whereas your financial side is asking, that's nice, it's a nice idea, but show me what the return on my investment is going to look like. And in those two sides where there's a clear mismatch in communication and language, a massive language barrier, is where the gap sits. Now, with that gap, if you look at startups, and in my view, what are startups? Startups are not your brick and mortar type companies. Again, I've mentioned OpenAI, I've mentioned ChatGPT, I've mentioned Claude. There's a number of businesses that come up and are able to scale globally, literally with a click of a button. You can go live today and be available to the world. Whereas a brick and mortar company, not so much, right? You've got to build your buildings, etc. So when I refer to startups, I'm looking at those that are able to scale globally in a very short space of time. And unfortunately, it's in the gap of the lack of, or the gap between innovation speak and investment speak where these startups tend to die. And it's not because the founders don't know what they're doing. And it's not because early investors don't know what they're doing either. Both know what they're doing. It's just the risk capital is not there. Founders find themselves under-resourced and unable to prove themselves, whereas investors tell them, come back to me when you've got traction. Come back to me when you've got X, Y, and Z. And then you've got on the other side, founders thinking, I wish I could do that, but I need capital in order to get that traction that you're looking for. And so we see ourselves in this loop that just kills the momentum of these early stage startups. And unfortunately, that's where they die. In our world, we call it the valley of death. Where momentum is killed, people struggle to get out of it simply because people that are required to inject the capital don't quite understand how to bring these little inventions into the broader scheme of things. So I'm going to tell you now, we think that there's no capital. Every founder will tell you, I can't get funded. But guess what? Just across Africa in the last year, we've raised $3.9 billion in funding. That's not a small amount. This was 500 deals, be it equity, be it debt, 500 deals across this continent. They could be so much more. And if you compare that to our larger counterparts and our more mature counterparts in the US, Europe, and so forth, we continue to grow while they starting to kind of bid down and reduce their funding. Nonetheless, we see a lot of growth in Africa because there's a lot of fundamental changes that need to happen. And we're going to get into it next. We're going to tell you where the money is actually going, because this is not a small ecosystem story anymore. This is a scaling ecosystem, and we've got the numbers to show. If you look at where South Africa and Africa generally focused on in prior years, a large amount, over 45%, used to go to just financial services and fintech solutions. In the last year, climate and energy, green tech businesses started to overtake. That's a very key indicator of where we need to be, where our money needs to be, where our focus needs to be. Why? Because that's telling us one thing. It's telling us that people coming up with solutions now are not just apps and lovely front ends and so forth. They're looking at fixing the continent's infrastructure. And that is very important. Fixing the infrastructure from the bottom up enables further development of other businesses that need it to build on. And that was the longest time, for the longest time, we haven't really done that. We've expected people to come up with innovative products and solutions without having the proper infrastructure down for them to work on. That is a governmental problem, and that is a whole different ballgame by itself and a discussion. But I'm going to put the pin there, and I'm going to say, think about it. Think about it if we had to have the cow train be able to touch every part of Africa. How cool would that be, logistics-wise? But if we did not have the railway set down, the fanciest trains in the world are not going to be able to run here, right? So same way, we need to start focusing a lot more on infrastructure development. And this is where corporates are needed. Corporates are needed to come in and join that and be the foundation for building that infrastructure. And why? Because corporates in the space where they should be winning, they're not. They've already got what every startup is trying to build. They've already got the customers. They've already got the data. They've already got the distribution. And they've got the infrastructure. So when you look at this, corporates are sitting inside of this. They're sitting on a mine, not a minefield, a gold mine, right? They've got everything it takes to actually deliver. So what's the problem? Why are they missing the basics? And I'll give you these 4 startups. These are billion-dollar companies, just 4 of Africa's unicorns. Each of them, if you look at their cap tables, corporates missed out. They missed out on getting in at the early stage. Flutterwave made payments easier across Africa. Chippercash, they took money across borders using SMS. Basic technology. Andela made talent available across the world. African talent available across the world. That is important because we are growing. I don't look at South Africa in isolation. When I talk Africa, I love looking at the continent because we are the future. And unless we know how to ride that wave and unless we know how to unlock what is there, we're not going to be able to get the returns that we need to build this continent out. And that's where these types of businesses that are making the small changes that may seem very small to us, especially as South Africans, they are making waves. So how do we get more and more people within corporates to see what they are missing early on? Because they are the closest to the problem. Flutterwave, Chipper, Wave Money, these guys come from the financial services sector. You look at what they're delivering, we think, oh, FNB could have done this easily. Discovery could have done it. I mean, how difficult could it be? Yet they didn't, right? So what's going on? Why are they not capturing that value? And this is a pattern, and this is the pattern that I've seen over and over and over again, from the inside and from the outside. We have these big launches, we have beautiful innovation labs, great media coverage. Everybody's also excited. And then 1 year later, why? Everything just starts falling apart. Why? Because internally in corporate organizations, what tends to happen is that they go from budget to budget. Every year, budgets change, and we don't see continuation. And because building businesses is a 10-year game, not a 1 year game, that mismatch tends to give us that little drop where things fall through the crack and they quietly start shutting down. So the reason is not really incompetence. Really, it's not, because we do have competent people. We have competent ecosystems. It's a misalignment in terms of incentives. Corporates are designed for stability. Shareholders want to see their returns. Startups, on the other hand, are designed to test. They're designed for speed. Corporates plan in quarters. Startups move in weeks. Corporates try and reduce the risk. Startups are literally experiments full of risk. So when you force one model into the other, it's not going to work. You can't force it. You need to find ways to bridge these things. And so if capital is not the problem and innovation is not the problem, what is missing? It's venture building, a basic concept that not many people understand. It's the process of taking a simple idea and turning it into something that is absolutely investable. So within a corporate space, whether it's becoming a division within the organization or an entire new business, venture building is key to making that happen. The first gap where we see the evidence is founders pitch their ideas. Investors want to fund proof. So the real job is not for them raising the money. It's building the enough proof that the investment becomes obvious. And that's not easy. The second gap is execution. Building a business is not just one skill. We know this. As an employee, you become extremely good at one area of your job. You do not see the entire, not many, I'm not going to say everybody in this call, but generally people do not see the entire value chain and how it works together. A founder needs that view. A founder has to have that capacity to be able to bring all these aspects together. And that's where we need structured support at the very early stages, holding them through and bringing them into the fold of how it all works in order to become scalable, investable ideas. The third gap is that capital doesn't move randomly. It moves through trust, through relationships, through people who can vouch for you. And if you have access to just that, if you don't have access to that, you're already way behind. And we know in our ecosystems and in our worlds, those networks are not the easiest networks to build. And that's where corporate can play a massive role in assisting these early stage founders. So one of the other most interesting things about Africa is that startups are not just improving systems, they're building for them. Whether it's payments, it's energy, it's supply chains, it's the infrastructure. It's the infrastructure that I mentioned earlier that's needed. Corporates already sit on this infrastructure largely. Take banks. Banks are able to move money across the continent. They need to work with other governments to figure out how that has to happen. And it should technically be easier for them, right? And so that's where the opportunity sits, with the power that these corporates hold. And so when we look at it, we're starting to see the shift where local investors now make up about 45% of venture capital participation. Venture capital is one of the riskiest types of investments. That's a very big deal, though, because it means that our ecosystem is getting used to taking risks. We're going from risk averse to being able to take risks on things that we're not sure is going to pan out. And the ecosystem needs that. It's about raising the bar in terms of what we can do and where we're willing to go. Again, corporates can play a big part from a corporate venture capital perspective in bridging that divide. And here's the part that most people do actually underestimate. In venture, everything compounds. Experience compounds, networks compound, reputation compounds, which means if you're not playing now, you're just standing still. You're already falling behind. And no one wants to be there, whether you're a corporate or you're a startup. So the opportunity is actually very simple. You build a system where ideas get validated, then you test it, and then you scale it. And once that pipeline exists, capital can flow a lot easier. Because once you have the belts and braces in place, people are comfortable to take the chance or the risk. So the question isn't, it should never be, should we innovate? The question should be, are we building the systems that actually convert our innovation into investment? Or are we just experimenting without expecting outcomes? Africa is not short of ideas, my friends. It's not short of capital. We are missing the people and the institutions that connect these two, the bridge builders that come together. So the real question is, from me to you, are you building that bridge? Or are you someone who's just watching someone else do it? What are you going to do to participate? With that, I'm going to say thank you. I know I want to leave some time for a few questions.
That was
But the
Keshni
question
helping us
remains with you.
understand. Hi, Keshni, can you hear me?
Yes, I can.
Wonderful. Good, good, good. Ladies and gentlemen, that was Keshni helping us understand where organizations most commonly break down between innovation and actually becoming investable. Keshni, thank you so much. What an incredible way to start our morning. Thank you for sharing those pearls of wisdoms. Ladies and gentlemen, what we've heard today is a powerful reminder that innovation alone is not enough. Ideas don't build businesses. Energy does not drive results, and potential does not attract investment. Execution does. Keshni has challenged us to look beyond the excitement of ideas and ask the harder questions. Are we truly moving, or are we just busy? Paul has a question for us, Keshni. Paul says, what do you think the quick wins are for large companies to work better with smaller companies that have brilliant ideas?
Oh, that's a very good question because we're all looking for quick wins. And let me tell you, quick wins are not as quick as we think they are. You need the infrastructure in place. We need corporates to actually have a look at how they can start incubating these businesses a lot quicker. There's a number of ideas. So there's in times where we put specific teams together that takes people from internally inside the company and train them to become entrepreneurs that are able to work with the market. Where this falls a little bit flat is where they tend to run off, still with the employee hat on, not realizing that as an employee, you don't have the challenges of an entrepreneur. They're not really putting themselves in that space where the entrepreneurs are using their own money in their pockets to go out there and validate what they're doing. Entrepreneurs from internal company, as an employee, they don't have that connection. So getting that, just an immersion into placing people into these startups is your first step. Getting them working with the startups as part of the startup, putting metrics in place for them to achieve certain goals and metrics helps them actually recalibrate and rewire their minds in terms of how to go about executing and taking these businesses to market. So if that was a quick win, that is the easiest way to actually get those brain cells firing up.
Thank you so much, Keshni. Yeah, that's perfect. That's absolutely perfect. I think those are some of the key shifts leaders need to actually think about in order to close that execution gap and actually drive real and measurable impact. Keshni, thank you so much for today's session. With all of that said and done, on behalf of Unique Speaker Bureau International, thank you for being part of Spark, Shift, and Succeed. We are going to be dropping you.
Melissa, before you close, can I just ask one more question?
Go for it.
To Keshni. Sorry, I had my hand up as well, but I think you thought I already had asked it. Keshni, just another thing. When it comes to what is my question for you again? When it comes to Sorry, I've completely lost my track now for you. But I wanted to. Uh, anyway, sorry, Melissa. You carry on. If I think of it right at the end, I might just slip it in there.
Thank you so much, Paul. It happens to the best of us. Nikki said, what an eye-opening way to start our week. Such brilliant ideas to think about. Thank you so much, Keshni. I think we can all ponder on those as we go into the week. And thank you once again, ladies and gentlemen. If there is anything you want to share with us, we'll be dropping you a note on email. We'll be giving you a few calls just to catch your feedback on this session. We'll catch you again next week. And on behalf of Unique Speaker Bureau International, thank you for being part of Spark, Shift, and Succeed. Join us again next week, same time, same place, where we drive impact right here at 9 a.m. South African time on Zoom. Thank you so much, everyone.